Hey, everybody, welcome back to another beautiful day in real estate. Happy Monday. Life is getting a little bit more chaotic in the space. Everything seems to be picking up right now, regardless of what's going on in the world. It is absolutely nuts. The last 6 weeks, we've seen a slow start to go up, and then the amount of people buying houses right now is absolutely nuts. I don't know about everywhere else in the United States, but North Dakota is absolutely ripping right now. Our inventory went down from 1.8 months worth of inventory to 1.5. So that means only 1.5 months of inventory, meaning if we stop selling houses today or we stop listing houses today, we'd essentially have about 1.5 months worth of inventory before that entire market would be empty. Now, think about it this way, too. Those homes that are sitting on the market, that 1.5, are typically homes that people don't even really want to buy, which is crazy to think about, right? I mean, those are the ones that are really outdated. They're really beat up. Maybe they aren't livable or they require a lot of work, whatever the case is. Homes that are in good shape are on and off the market in a matter of minutes. If they're listed at a correct price, if they are updated or at least cared for, you have significant moves. I just wrote another 2 offers this weekend, and we're starting to kick up a little bit. Somebody reached out this morning, ready to buy a house. We're signing another new construction one on Wednesday, another new construction meeting today. The market's feeling good, you guys. Market's feeling good. And, I know a lot of people are really struggling through things right now. And today we're going to talk about bond markets, and we're going to explain a little bit how that's carrying over. And then we're going to put our tinfoil hats on at the end, and we're going to talk a little bit about what potentially is going to happen over the next 6 months. So, all right, you guys. First off, interest rates. Interest rates are on the way in the right direction. Actually, not really. They're heading up again. We're above 6% for the FHA and VA, and we are at 6.65%. for the national 30-year conventional average. Reason is because, well, the bond market took a nice little jump this weekend. We saw it push all the way up to 4.97, which, we were kind of wondering how things were going to look, but I mean, that's the higher. I mean, we're jumping into new territory now for resistance. Let's kind of find our way through here, right? So we've seen 1, 2, 3, now we're at 4. We see kind of a support here, a little bit of volatility here. So, I mean, that 4.5 is a pretty strong zone to be in right now. As you can see, it's kind of coming down. Why are the markets sitting like this currently? Well, let's kind of have that conversation. First, before we do that, let's talk a little bit about the bond market, and then we'll go over oil prices, and then we'll talk a little bit about what happened last week. China and Trump met in Beijing, and it was a interesting week. We'll say that. So, long story short, when bond prices go up, so do interest rates, right? So you're going to see that 2% gap between bond prices, the 10-year bond and the 30-year conventional. So 4.57 up to 6.65. So about 2.09%. So about 209 basis points. But it doesn't surprise me. Again, the Strait of Hormuz still isn't open, and whether we want to admit it or not, that directly correlates to the U.S. economy. But really what's drawing in the negative in the bond market currently is that, all right, we'll just jump into the bond market. Let's just do it. Okay, so the worst case scenario for the U.S. debt market is happening right now. China's total holdings, U.S. Treasury bonds, have dropped to $693 billion, back to levels seen during 2008 crash, okay? China once held 1.3 trillion, so essentially we're about halfway between where we once were. So we're about half. They're holding about half of what they initially were beforehand. That number has been cut nearly in half. Oh, literally. Okay. And as the U.S. continues to run to a $2 trillion annual deficit, the countries that used to buy the debt are selling aggressively. Japanese investors also dumped U.S. bonds at the fastest rate pace in 4 years. China is now at 18-year lows. When there are fewer buyers of U.S. debt, the U.S. has to offer higher interest rates to attract new ones. This is why U.S. 30 Treasury is 5.1%. They're not the only ones that are at 5.1% either, right? We also have the Japanese bonds, the highest that the Japanese bonds have been in, 30 freaking years, which is absolutely insane. Japanese investors have dropped 29.6 billion in U.S. Treasuries and local authority debt in Q1 of 2026, the largest quarterly sale since quarter 2 of 2022. So those of you that don't know, in 2022, in quarter 2 is when we started quantitative tightening. We were really pulling money out of the market, right? So interest rates are on their way up at that point. So And another thing is the Japanese bonds are now sitting are now sitting at the highest they've been in over 30 years as well. What was it? Almost 3%. Japanese bonds have been at basically zero for over 20 years. I mean, basically the Japanese investors, they buy the debt from you buy U.S. Treasury bonds because they can pull an interest, and then they can basically generate a little bit of revenue that way rather than buying treasuries that are basically zero, right? Well, now they're up to 3%, so they're going to feel more confident investing in their own economy, right? So anyways, agency debt includes mortgage-backed securities and bonds from government-sponsored entities, while local authority debt includes municipal bonds issued by U.S. states, cities, and local government. This comes as a rise in interest rate expectations driven by a rebound in inflation weighed on bond prices. So inflation is on its way back up again. Bond prices are on their way back up again. Interest rates are on their way back up again. And this comes right after Kevin Warsh gets confirmed as the Fed president for a 4-year term. He came in with the mentality that he's going to completely change the way that the Federal Reserve operates. And that's why I'm interested, right? So, I was listening to he's one of the YouTubers I listen to. His main focus is buying multi units, over 100 million invested in multi units. And what he is talking about, and I don't disagree with him, is Kevin Warsh is going to come in. He's going to shift things a little bit differently than normal. Well, they're not just going to drop interest rates. Their goal is to raise interest rates and pull money, lower interest rates and pull money out of the economy. Kind of the opposite of what we've been doing for the last 20 years, right? They were just printing money, and then they would lower interest rates, lower interest rate environments, and more people were buying, et cetera, et cetera. So right now, especially with the U.S. bond getting dumped so quickly, that's kind of where we're at, right? So let's see, we're at the 10-year. The 30-year bond is sitting here at 5.1% again. We don't pay as much attention to the 30-year bond. I mean, it's not something that's really relative to our what we typically trade. We'll just expand that trend line a little bit there. So trend line goes all the way back to September of 24. However, we did see a slight lull down here. This was beginning of March. This was right before the war in Iran. So we broke that. We retested, and then the war started, and we moved up again. So the war started at the beginning of March, and that was the war with Iran and the United States, which... Let's talk about China and United States meeting in Beijing. This is actually pretty significant. So there has been, let's just read this and we'll dive into it. Okay, so the White House unveiled the U.S. China trade deals and development following President's meeting with I can never say his name, President Trump and President X confirmed their shared goal to denuclearize North Korea. I mean, let's be real here. This is what happens every time they get into an argument, right? They're like, these two guys fight. They fight like brothers. And they're like, okay, we're done now. Now we're going to point it at the little brother, okay? So they're going to go after that argument, right? It's always nuclear weapons when they get pushed into a corner, which always makes me kind of chuckle. But both nations agreed Iran cannot obtain nuclear weapons and called for the Strait of Hormuz to remain open without tolls or disruptions. So that is a very big thing. The Strait of Hormuz, you guys, it has about 20% of oil. The world's oil passes through there, and the world, and that's not just for cars. That's for all sorts of products. Different kinds of oil for different kinds of products. Oil's in so many different products. Like today, I was finding out there's some makeups with oils, and things like that. And it's not just going to directly affect how much our gas prices are. It's going to affect a lot more, and it creates concern when we're not seeing trade go through these channels, right? Big channels like this. My tinfoil hat on this is that, China and the United States have typically not necessarily been enemies, but not necessarily allies for quite some time, right? So now that we're finally seeing a little bit of mesh together, it's you have the two biggest economies. Granted, both of them are negative GDPs, and it's pretty brutal right now. But you have the two biggest economies right now that are coming together, saying we need to make a change and we need to save our economies. Because let's be honest, if we went into a full world war, I think the entire world economy would collapse. It's that fragile right now, and I don't think that they're going to move into a full war. It just doesn't make any sense, right? Now, if they can end the war in Iran, end the war in the Ukraine, which, by the way, the Ukraine war is still going on. A lot of people don't even talk about that anymore, but that's still going on. There was drone strikes this weekend out there. Unfortunately, Russia, they hit some facilities, and it was just massive black smoke. It was kind of insane to see. And then, Iran and the United States haven't necessarily been shooting at each other, but necessarily haven't really agreed either, right? So think about it this way, right? These two biggest economies are starting to work together now, and they were in talks with NVIDIA. They had 20 of the U.S. CEOs and the CEO of NVIDIA in China. This is very significant. Like, we're talking the Mark Zuckerbergs, the Elon Musks, I'm trying to think who else was all there. I don't even remember off the tip of my head. I looked at them this weekend, but okay, you have the top 20 CEOs in the United States companies coming with Trump to meet with China. Why? Because they're going to work out a way where they're going to integrate business into both of these economies and help build sustainability. They're going to add jobs. They're going to create ways where more people can thrive in these economies. I think we're on the verge of a building economy. We're not just printing money anymore. It's an idea of how can we structure to build this economy and make it strong once again. This deal or this meeting with China is actually very significant from a business perspective, right? Because again, if you have two people that have been rubbing knuckles for the last, I don't even know how long, and all of a sudden they're working together to make things work, all of a sudden you have a superpower of strong leaders working for a direct goal, which is prosperity, right? Trade deals working in place. China might even start coming buying oil from the United States. We'll kind of finish off with the footnotes here, and then we'll keep going. China agreed to address U.S. concerns over rare earth supply chains, including critical minerals like neodymium, scandium, yttrium, and indium. Okay, I'm going to have to look those up later because I have no freaking clue what those are. Those are words I've never even heard of. Those don't even look like words. Okay. China approved an initial purchase of 200 American-made Boeing aircraft, the country's first Boeing order since 2017. Who was president at that point? Oh, yeah, that's right. China committed to buying at least $17 billion per year of agricultural products through 2028, in addition to previous soybean agreements. So it's crazy, but soybean has been a big topic of discussion in the last few years. China restored market access for over 400 U.S. beef facilities and agreed to work toward lifting remaining suspensions. Okay, good stuff there. China also resumed poultry imports from U.S. states cleared by USDA and avian influenza safety. So honestly, a lot got done this last week, man. A lot got done this last week. And I don't think people are really giving the credibility behind it, because right now you're just talking about China doing the thing. But really, this is pretty significant. They came out of a negotiation deal pretty strong, and things are looking good. The problem that we're witnessing now, though, I mean, and more than anything, is the amount of how much people are struggling, right? We came in with 115,000 added jobs in April of 2026, which they will revise 60 days, 90 days, and a year from now saying they were wrong. Here's the correct numbers. Let's be honest, there's no real definite way to, in real time, see what's actually going on, because there are still people struggling to get jobs. There are still people struggling to make ends meet. There are still people that are struggling to foot the bill at the gas pump, right? I have to fill my gas this morning. Guarantee you it's going to cost me over $100 to fill my truck. But some people don't have the capability of doing that comfortably. And now we're talking even, I've talked about it before. The debt doesn't rely mostly on real estate anymore. It is a major focus on school debt, car loans, and credit card debt. Those are your three big FUs to the economy right now that are causing a problem. So Americans are defaulting on their student loan debt at a record pace. Delinquent federal student loan debt jumped $12.2 billion in Q1 to $171.4 billion at all time. This officially surpasses the $1.66 billion peak recorded in quarter four of 2019. So this is pre-COVID, right? At the same time, the proportion of serious delinquent loans rose 0.07% to 10.3%, the highest since Q1 of 2020, which was right beginning COVID. This comes at $2.6 million defaulted in Q1 of 2026, followed by $1 million in Q4 of 2025. The average borrower entering default is now nearly 40 years old, up to 36.4 before the 2020 pandemic. U.S. student loan crisis is intensifying because people are not comfortable. Okay, like across the United States, it is very uncomfortable for a lot of people right now. Again, North Dakota being a little bit different, we have a strong economy. We have good jobs. It is the cost of living is going up, but it's not to the point where people can't make ends meet. The commutes are not an hour long every single day where you're sitting in a car. People can get to and from work in 15 minutes. It's a safer neighborhood. There's a lot more homes that you can build here. There's affordability. There's opportunity. It's a lot different than metropolitan areas here, and that's why so many people are moving here. I'm seeing license plates from all over the country. I mean, used to see only North Dakota license plate. Everything from Oklahoma to Texas to Florida to Carolinas, New York. I've seen some from California, Washington. I mean, people are coming from the bigger areas to smaller Midwestern towns because it's more affordable. It's safe. It's a place where you can raise a family. And right now, affordability continues to be the conversation of discussion. So until we see some relief, which I don't know if we're going to see the relief this year. We might. I mean, there's going to be something moving into Q4 this year. There just has to be when you're talking about an election year like this or a midterm election year. As you can see, the intensification of mayors and senators is getting pretty hot and heavy out there. So to really guess what's going to go on in the next few months, I think that we're just. And I didn't even talk about it. On Thursday, we saw the Clarity Act get passed, now moving to the Senate, right? So Congress passed the Clarity Act, which goes to the Senate. The Senate gets nonpartisan support, which it's a Republican-packed bill, and Republicans have control of the Senate currently, which means more than likely he's going to get pushed through, and then we're going to see it on President Trump's desk. You guys, that offers huge innovation. The first country in the entire world that actually has clear regulatory framework for cryptocurrencies, whether you believe in it or not. I mean, we are seeing massive companies building and structuring their companies around cryptocurrencies, blockchain, all of those things, right? So there is a shift, right? And my tinfoil hat for the day is going to be towards the end of the video here, but U.S. Treasury bonds are up to 5.16 on the 30-year Treasury yield. And then we also have the 30-year bond at 30-year. Holy wow. Just this year alone, man, we went from 3 to 4%, a full gap in 4 months. That's insane. So the UK 30-year Treasury, the Japanese 30-year Treasury, and the U.S. Treasury 30-year Treasury is all at all-time highs, or relatively close to, I shouldn't say all-time highs, they're close to the all-time highs of recent years. Why? Because right now the printing of money no longer works. It's not a it's not a can kick down the road. It's coming to the chickens are coming home to roost, and every middle class American is feeling it here. I don't know how other countries are, and I can't speak to that because I don't know. But dude, here in the United States, people are struggling, and I sometimes I forget because we've been so blessed with the opportunity to do what we do, but there's a lot of things out there that people are struggling to pay for: food, gas, groceries, rent, healthcare, school supplies. In some cases, like, it is really getting to be harder out there, and something has to change, and something will change over the next year. What that looks like is kind of up in the air right now, but as of now, the economy is getting tougher. People are feeling it, and this is why most people are going home wishing they had a better outcome. And here's the thing: we can create a better outcome. I'm living proof of that. I built my entire business off of never wanting to struggle in this economy, and it took a lot of discipline, and honestly, you go through a lot of resistance in this kind of line of work because you're gone all the time, you're working your ass off all the time, but we built the life behind it, right? So that's why we started doing these channels anyways, was we wanted to start really diving in and understanding this stuff. I did a video for my brokerage talking about what do most people not know about me. Most people don't know how much I engrave myself in this because it's that important, and it's so boring that most people don't want to look into it. But it does dictate the way that things are going to look in the next year, in the next 10 years. And we're at a time now where money is moving extremely quick, and the innovation is going even quicker. If we're talking about AI and the way that AI directly has impacted the workforce and will continue to actively impact the workforce and take away white collar jobs, and there's going to be a time unemployment is going to go up, and there's going to be more efficiency in companies with less people because you don't need the people anymore. I know now. I had an entire conversation with my Claude bot and asking questions and creating SOPs, and I'm working on getting a virtual assistant. So I'm creating and establishing a list of items that need to be taken care of, talking through. Like, it is magnificent what AI can do. And those of you that are not leaning into it are going to cost yourselves a lot of time and money. But Yeah, man, I ranted this entire video, but the whole point of this video is to wrap up that bond prices are going up, interest rates are going up, and I think we need to settle in because it's going to be a tougher summer than we were anticipating. However, there's light at the end of the tunnel. There's a lot of optimism. Things like this, where China meets with the United States and starts working forward to a neutral future. You see the Clarity Act popping through, which is going to create an opportunity for more businesses to establish in the United States, creating jobs later on. We've seen trillions of dollars looking to be invested in the next 4 years into the United States, building facilities, building different facilities like car manufacturers or computer chips, things like that. We're going to be establishing more jobs once again. So, all of that being said, hold on, you guys. We're moving towards a positive future. It's going to take time. And right now, just start doing the best you can. Look into AI, understand what it means, start using it, start understanding what cryptocurrency and moving money is all about, and also pay attention to those bond yields because as they start to go down, which they potentially could here in the next 6 months, I think that the market's going to go on a tear. So I think it's very important that you're buying assets. And there's more people coming out now saying that things are starting to look juicy again. So we'll see once where we're sitting. Last thing I want to check before we leave is I really want to see once where are we sitting with. We're starting to finally see the S&P 500 peaked at 7,516, and we are down at 7,408 on the open in this morning, which means we're probably going to retest down here somewhere at 3 or 7,300 some, and then we're going to take our next leg up towards a blow off top. We've talked about that before. We're out of time to talk about it today, so let's just keep moving, and we'll jump into it tomorrow. Have a blessed day. Enjoy your week. We'll see you soon.